Broadcasting live from the world's first chupacabra breeding farm, deep in the heart of the New Mexico desert. It's time for New Mexico, Red or Green, the show for people who hustle and grind. Entrepreneur and New Mexico homeboy Jaime Ramirez gives you tips on branding, finances, startup advice, as well as restaurant reviews, sad stories about the Chicago Bears, and interesting notes and information about New Mexico, the state he loves so much. Now get off your social media and get on your way to making more, giving more back, and if you're really good, you might get your own chupacabra. Here's Jaime Ramirez.
Hey everybody, this is Jaime with New Mexico Red and Green. Today we're talking to Sheryl Arndt. Is that how you say the last name? Cheryl. And I'm going to be asked, she's a mortgage broker, mortgage lender.
I'm a mortgage consultant.
See, I didn't even know. And I've been trying to get some deals done with her. So the reason I'm talking to her today is because there's a lot of people out there that don't know the answers to things I don't know, because I'm a real estate broker, but I used to sell cars and do financing, so homes are totally different. It's not the same thing. So I asked a bunch of my clients to give me a question to ask her, and that's what we're going to do. 15 simple questions, maybe 16. If something comes up in my head, I'll ask you again. So, so that's basically it. Today, that's what we're going to do. But introduce yourself. Look at the camera and tell them, introduce yourself.
All right. Well, my name is Sheryl Arndt, and I'm with Loan Depot. I'm a mortgage loan consultant. I've been in the business 18 years. I lived through the crash of 2008. I survived to talk about it. And I'm living through the crash of 2022 as well. So,
Okay.
Ready to do some business.
Okay, well, that's one of the first questions. Somebody asked me about what's the difference between a set interest rate and a adjustable rate.
Okay.
Because if they were to get an adjustable rate at a lower rate right now, what if it changes in 2, 3, 4 years? And how do those work?
Good question. If you get a fixed rate, your fixed rate will be fixed for the duration of the loan. If you get a 15-year loan, it'll be good for the 15 years. If you get a 30-year loan, it'll be good for 30 years. It won't change. So your principal and interest portion of your mortgage payment will always remain the same if you have a fixed rate. If you get an adjustable rate, for instance, if you get a 5-1 ARM, the rate will be fixed for the first 5 years, and then it can adjust every year after that. It could go up, down, or it could stay the same, but it's going to be based on current market conditions. An adjustable rate can be really good if you're looking to maybe sell the house before the rate adjusts. So, for instance, I had a customer years ago. His job predictably always transfers him every 5 years. So he asked me for a 5-1 ARM, and he got a rate that was approximately 2 points below the current market rate. So he's actually saving money by doing this all the time, every time that he transfers. So every time he gets one, he gets a new 5-1 ARM. He actually ends up ahead of the game. So the fixed rate, that's usually what we sell to people, but it's probably the worst deal there is out there. It's definitely a better idea if you try to do the adjustable rate instead.
I would never have thought of that. Especially the guys that are like in the oil fields or truck drivers or something like that. All right.
I don't do them very often. Every now and then, it's usually if somebody asks about it, and this customer specifically came to me and said that, and that's what we did for him. So
awesome. He must have learned from somebody else.
He learned, yes, he did. And, if I usually don't even approach the conversation with people, I should. But a lot of times people don't want to hear it. All they think is adjustable rate, and they think it's going to go up. Well, it could go down. Rates are kind of high right now. So if in a year or two rates go down, your rate could actually go down if you have an adjustable rate mortgage.
All right. Cool. See? Something I would
Learn
never
something
heard
new
of.
every day.
And then one of the customers I have is actually renting, and he said, how can I tell when it's time to stop renting and buy a home? And I go, well, I don't know if that's something to ask, but I go, I'll ask.
Why not? Yep. The time is right when you're right to do it. If you try to time the market, there's always going to be a worse time to do it. There's always going to be a better time. So the time is right when you're ready to do it. When you're ready to pull the trigger, if you decide that you're ready to do it, your best bet's to talk to a good loan officer who can take a look at your credit report and discuss your situation.
Okay.
Yep.
Yeah, and the same guy asked, he goes, well, how long does a buying process typically take for a mortgage to go through? Because he didn't want to stop renting and lose the place if he couldn't get finance?
Very good question. Now, number one, you're going to want to ask your landlord how much notice you need to give them. For instance, I just had a customer, we closed this transaction a couple days ago. And luckily for him, when you close the transaction on January 11th, your first payment's actually not due until March the 1st. But when you make that first mortgage payment, you're making that payment in arrears for the month of February. But when you go to the closing on January 11th, we collect for the interest for the month of January. So you actually get a month off. Rent is paid in advance. So you probably have a rent payment due on February 1st. He ended up giving 60 days notice. That's what they required. So it worked out for him because that way he doesn't have to make his first mortgage payment until March the 1st. As far as how much notice, depends on what your landlord wants. I would talk to them first, find out what you have to do, and then keep that in mind that you will get that month off, because when you make the rent payment on February 1st, you're making it in advance for the month of February, but the mortgage is paid backwards.
Kind of like a car loan, when I did the car loans. So you don't have your payment until the first 45 days,
Right.
sometimes 90.
Exactly.
Yeah, especially the bank's going to help out. All right?
Exactly.
So the next question we have is, what's the first step a buyer needs to do to get a loan?
The first step.
Fill out a credit app?
It's interesting. Usually what happens is customers get the bug that they want to start looking for homes. Everybody's online these days, so they go on Zillow or Realtor.com, or they're looking on social media, and they find
24/7 open homes?
Yeah, 24/7 open homes. They find a house that they like, and then they call that agent, and then they expect that agent's going to make it happen for them. So I always joke with my husband about it, that people always buy the house, they don't buy the mortgage. The mortgage is the boring part, but in reality, that's where you should start. Before you even get the bug, before you even look at a home and get excited about it, you really should talk to a good loan officer who can who can discuss with you your credit situation, your financial situation, your down payment situation. Those are usually the 3 questions that I ask. And then what price range you can start looking for. So it's easy to get excited about that $500,000 house, but you may not be able to afford it.
Right.
And of course they're nice. You like the $500,000 house, but if your budget doesn't allow for that, by talking to a loan officer first, you're not going to get excited about a house you can't afford.
And that's why that in 08 it all went to
Yes, sir.
to heck, because people were buying the houses way too much
Yes.
for what they were, and then now we're in the situation that we're in again. So yeah.
And people ask me a lot of times, well, what can I afford? You know what? I don't answer that question for you. Okay, I'll tell you what I can qualify you for, but only you can answer the question as to what your budget can handle and what you can afford.
Yeah, if you tell them they can make $1,500, but they can really afford $1,000 because
Right.
they didn't tell you about the kids going to private school
And the
this
child
and
support
that.
and the alimony.
Okay. Well, that's a good thing. So that was the other one that another customer had, and I kind of try to put these in line with like, what's next?
Yeah.
So he goes, do I need good credit? Because they had a situation just like that where child support, or they're going through a divorce, things happen, lost their job, especially in the oil fields in New Mexico and the Southwest.
Right.
They get their jobs for like 6 months and then they lose it, and then they get their 6 months back. You
Yep.
know, so do they need good
exactly.
credit to buy a house?
You need acceptable credit. Now, as far as good credit, the better your credit score, the better the deal you're going to get. You're going to get a better interest rate, better terms. It's going to be easier to qualify you, of course, if your credit's higher. But that doesn't mean I can't help you. If your credit's lower, we're going to look at the overall risk on the loan. So if you have a 580 credit score, you might need a bigger down payment. So we're going to look at the underwriting is going to look at your credit. They're going to look at your income situation and how much money you're putting down. The more skin you have in the game, the less risky it is for the lender. So if you come in with a lot of money, we don't necessarily care what your credit score. We do care what your credit score is, but it's of less importance.
Yeah, I'm a veteran, so I got a VA loan.
Yeah.
And so that was the other question. How much down payment do you? Because as a veteran home, and it's your primary home, you don't need nothing.
Yep.
But they want 20% to cover up the problem, so you have to get insurance, right?
The mortgage insurance on a VA loan.
Yes.
VA loans will allow for zero down. You can have lower credit scores, but you're not going to pay monthly mortgage insurance, but you will pay an upfront funding fee.
Okay.
So depending upon your circumstances, if you're a disabled vet, you may be exempt from that funding fee. The funding fee is a fee that gets added to your loan amount. So if you get a $100,000 loan, they're going to add a fee on top of that, and your loan's actually going to be more.
Does it ever go down later on?
No, it's not. No, because it's paid it's paid as part of your loan. If you're a disabled vet, sometimes you can be exempt from that, which makes the VA loan especially attractive. But there is no monthly mortgage insurance, so your monthly payment's going to be lower. But you do have to pay that fee up front.
Okay.
And then essentially it gets financed, so you are paying interest on it. But it's a great loan program for veterans. I actually just did a VA loan for another customer, and because he ended up getting the seller to pay all of his closing costs, he got a refund. How many people walk into a closing and buy a house and get a refund? So he actually got his money. He got his appraisal fee and he got his earnest money back.
Wow.
So yeah, walked in with nothing.
All right. So the next question that I got was, do you handle underwriting in house? And I don't know why they asked that, but I go, I'll ask.
Yeah. In-house as far as in the same office physically as me, no. In-house as far as the same company, I work for a company called Loan Depot. We have our own in-house underwriters, but they're all over the country.
Okay.
So, but we do work with a handful of underwriters that work with my office, but they're not necessarily local.
Okay. And what's the average loan processing time from point A to point B on an average?
On an average, depends on the loan type. I'm doing a lot of renovation loans, and those are taking upwards of 90 days.
That was going to be my next question.
I just did a loan in about 3 weeks for another customer, but she had an appraisal waiver. The better prepared you are as a customer up front, the quicker the process is going to be. So the more communicative you are, if your credit's good, you got a good job, you got money down, and you provide all of those documents. That's one thing that we do at Loan Depot is most lenders are going to do a pre-qualification. So you're going to talk to a loan officer who essentially is a salesperson. They're going to pull your credit, talk to you about your income, your down payment situation, and your job situation, and give you a pre-qualification. They may run it through an automated underwriting system and issue you a letter so you can go and look for a house. Well, you may have some weird thing on your credit that once a human underwriter takes a look at it could be an issue. One thing that we actually do is I'll package up the loan, I'll pre-qualify you and get you a letter so you can go out with High May and look for your house. But meantime, you're going to get me your paycheck stubs, your W-2s, your bank statements, and any other documentation that might be pertinent to your situation. And I'm going to send it into a human underwriter to iron out all those credit issues. So, for instance, I have a customer right now who actually on his credit, he didn't tell me about it, but I found it on his credit report. He's actually got a child support obligation and he's behind on it. Looks like he's making his payments, but he got behind at some point. And so
behind.
Every payment from then forward, it's a rolling late. I don't know what my human underwriter is going to say about it. So I issued him a pre-qualification letter, brought the issue up to them and told them, get me all of your documentation. Let's send it into a human underwriter. He'll take a look at it and let us know if any of that needs to be addressed or if it's even a deal killer. Yeah, and these customers actually had lower credit scores. We're talking high 500s, which I actually had concerns as to whether or not I could even get it to go through my automated underwriting system. But because they're putting down a significant down payment, it mitigates the risk on the loan, and I actually got it to approve. So
wow, that's awesome.
Yeah, we're going to move forward with it.
Nice.
Yeah, I was pleasantly surprised.
Yeah. Well, when you talked about how the loan officer, basically salesman, said when they give them the credit information, do they pull a hard credit check? What's the difference between a hard credit check and when they say it's not a hard credit check? Because when you hear that, in my mind, I'm like, I used to sell cars and I had to pull bureaus.
Right.
And I saw everything that the guy down the street had to see. So is there such a thing as
a soft credit pull?
Soft credit pull?
Yes.
Okay.
Yes. If you yourself go online to a website like Credit Karma or annualcreditreport.com, you can do a soft credit pull, which is you pulling it yourself, which does not show up as any kind of an inquiry. But when I, as a potential creditor, pull it, yes, it does show up as an inquiry on your credit report. And anytime you let any other mortgage company or car loan company or bank, credit card, it does show up and we see that you've been shopping for credit. So it does have the potential to hurt your score, which brings up another point. Before you talk to your loan officer, I highly recommend, there is a website that you want to go to called optoutprescreen.com. Have you heard of it, Jaime?
No, opt out pre-screen.
My tip of the day, okay?
All right.
Anytime any potential creditor, that would be me, your car dealership, a credit card, the bank, pulls your credit.
They have to ask special information just to get through it.
No, anytime I pull a customer's credit, it triggers the credit bureau, that's Experian, Equifax, and TransUnion, to then sell off your personal information to everybody else and his brother, meaning my competition, other banks, okay, who can then call you, email you, text you, spam you, send you junk mail, and basically solicit your business. So if you don't have to do anything, but if you don't like those things, which most people don't,
right,
you want to go to that website, optoutprescreen.com. I'll say it again.
I'll put it on the screen.
Optoutprescreen.com. Go there, opt out of allowing the credit bureau to do that.
Okay.
You want to do that immediately before you allow any creditor to pull your credit, and that's going to put a stop to that.
And usually you guys tell them, don't go try to buy a car, don't go try to buy furniture.
Good question, yes.
Because if you do, because
I find out about it.
And I would get all the information as a car guy before I got in the real estate.
Right.
I would pull it. I go, this guy going to buy not from me, he's going to buy down the street.
That's right.
So I pulled it anyway. If they gave me the information and signed, said, here, pull my credit, I'm not going to say no.
Right, yeah.
I don't care if you buy a house. I'd rather you buy a car so that those other guys don't care.
Right.
So...
Yeah, and a lot of times car dealerships are sending it out to multiple banks, so we see a lot of inquiries on your credit reports when you're shopping for a car. But once you've had it pulled for a mortgage and you're under contract to purchase a new home, and we have a live loan application, it's my underwriter and I actually get notifications when you're allowing other people to pull your credit or if you've actually taken out new credit. So... you do want to be careful with that because we do find out about it. Doesn't mean it's a deal killer. I actually had another customer. I always like to talk about specific scenarios because it's easy to
remember what you had to do.
Yeah.
And that's even better because you can't just give a flat thing. This
is live.
Happened.
Yeah, this happened actually. She's a very good loan prospect. And she's actually the one that we closed in 3 weeks. But during the transaction, I got an alert that she had taken out some new credit. And I panic, of course, when that happens, but it doesn't mean it's a deal killer. So the good news, there's good and bad news. So I called my customer about it, and she says, I don't know anything I don't know who that is. I have no idea. I didn't take out any new credit, I promise. So she's like, it must be fraud. Okay. Well, the good news is that we were able to qualify her with the debt that showed up. So, but whatever the monthly payment it was on it, it still did not hurt her debt to income ratio. She still qualified. So, as far as that I'm concerned, I'm not concerned that it was fraud. She's concerned that it's fraud. So, I gave her instructions. She probably wants to hire or file a police report. Right. And report it, and come to find out there was somebody else at this bank that had her same name. So I think it was a mistake.
Right.
That it ended up on her credit report. So I don't know that it was fraud per se, but I think somehow it ended up on the wrong. But as far as we were concerned, the fortunate thing for her is that she's still qualified even with that debt, even though it's not hers.
No, that's good.
But then she can still take measures to get
stop that.
Yeah, to stop it.
The other question somebody had was, you have an origination fee. That was it.
Yes.
Well, you got to get paid, right?
Yeah, of course, we get paid. Yes,
the lights
we do have an
don't get
origination
paid
fee
for free, right?
Actually, we charge an underwriting fee and a processing fee, but essentially it's the same. But if you're checking around with different lenders, they may have what's essentially the same thing and it may have different names. So you may see an origination fee, you may see a processing fee, you may see an underwriting fee. But essentially once you've made an application with a lender, they're required to get you out what's called a loan estimate within 3 days. And you can take a look at the loan estimate, look in the very top section, and that'll show you any lender fees that are being charged. You may also see discount points. So some lenders just charge a flat discount point always, or based on the rate that you're choosing, you may have a larger or smaller discount point.
Well, the question I have is because it happened to me. I had a customer, they're qualified, great credit, it was a conventional loan, and we're going to closing, and the inspector went and inspected the house for them and for the bank, and came back with some minor stuff. But they wanted to knock down $8,000 off the price, and I said, whoa. So I went over there with the owner. We checked everything. We did a little video saying this. We changed it to $3,000.
Okay.
So a $3,000 credit, and they didn't change the loan, but they wanted to send it back to get a reapproval for that $3,000.
They do.
And so, which is better, to get credit at closing and just have the higher finance fee, or drop the finance fee? I guess drop the amount financed. Does that make sense?
Like the purchase price, you mean?
Right.
Yeah, and that's a good question. You can do either or both. Either option is going to require a re-review by
the bank,
by the underwriter. And depending upon the type of loan, there's a restriction on the amount that the seller can kick in for seller credits, which is why it has to be reviewed.
Okay.
So, depending upon how much it is, you may have to do both. But I think you're asking about like a price reduction.
Right.
Yeah.
So it's a price reduction, and they wanted us at closing they get a check back for a certain amount instead of redoing the loan.
Yeah.
So they would keep going through because it was close to closing.
Right.
And they were afraid that by the time they did that, it wouldn't we'd have to do an extension and more paperwork.
Right, more paperwork. Yeah, if you just do a credit, that's something outside the loan that you probably wouldn't involve your loan officer with.
All right.
He needs $10,000 in repairs. First of all, do not share your inspection with your loan officer, because that does raise questions. So you guys keep that between you. But if you need to do a price reduction, it does not always affect the amount of the loan. So say you're purchasing a $200,000 house, but the customer's putting down $100,000. Oh, we can leave the loan amount the same, and then you can still reduce the price.
Because the appraisal's still going to come in.
And then it would affect the loan to value, but it doesn't necessarily affect the pricing on the loan. It would have to go back to underwriting because any contract amendments have to be re-reviewed. Okay. So, but you could do a combination of a price reduction and a seller credit toward closing costs. Or if you choose to cut a check but outside the closing, don't tell me about it.
Okay. Well, the title company would tell you, I guess.
I know, right?
Yeah, because they do all the
they do the
escrow, they do the check and everything.
Yeah.
Okay, so that comes back to what I was going to think. So when the bank asks for an appraisal, how do you get your appraisal? The reason I say that is because we have a few appraisers here in Grant County, but then there's some in Deming, and they'll come once a month, and then you got people in Las Cruces, which is 110 miles away, and they'll come once a month, and they'll do like 5 or 6 houses in one day. And my question is, why can't you get it done from somebody here? But I don't know how you guys go about getting your appraisers.
Good question.
Because that might hold up, and you have to get an extension, which when it was real busy last year, I had to put 3 extensions because we're waiting for the appraisal, which took forever.
Right. Understood.
And
after the crash of 2008, they instituted some regulations regarding appraisals. Back in the day, I had relationships with appraisers, and I could call my appraiser and say, "Hey, can you do this order for me?" And they would accept the order, and the customer would pay for it, and everybody was happy. Well, after everything happened in 2008, there were some things that were going on. Essentially, loan officers were calling appraisers and saying things like, "Hey, I need you to get me $200,000 for this house. Can you do it? If you do it, I'll send you this order." That kind of thing. And so in order to put a stop to that sort of thing, they wanted some appraiser independence. And so we actually have to work through a third party. So I, as a loan officer, am not allowed to communicate with appraisers on my transactions. So I don't have any relationships with appraisers because of that anymore.
That whole reason.
Yeah, so we work through a third party. So we order an appraisal, and the third party basically has to be on the panel for that appraisal board, and there's lots of them out there. And so, you may work with me, and I'm with Loan Depot, and I may have a certain set of appraisers that work with our panel. A different bank may have a different set of appraisers. Now, that
like Blue Cross says you can use these doctors.
Right.
This insurance says you can only use these doctors.
Right.
Same
but
thing. They're approved through them.
Yeah, appraisers can sign up with all of the different panels, which most of them do. Mm-hmm. So they're all on everybody's panel.
Right.
So it depends. If it's a VA loan, they're pretty much taking the next guy on the list.
Okay.
For instance, conventional and FHA appraisers are going to be farmed out. Hey, I've got an appraisal here. The price is $700. I need it in by January 31st. Can you do it?
Okay.
And the appraiser may say yes or no. And then if they say no, then they got to find somebody else. So the local guy may have turned it down. And so you're right. We do end up in Silver City with appraisers coming from Las Cruces or Albuquerque to do those orders. But a lot of times the appraiser will refuse it at the lower price. And then they will do it, but they want more money.
Right.
So if that happens, we make sure our customer's okay with it.
Because what happens is my appraisal comes in low.
Good question.
Then you get that appraiser that's not from here, and I don't know how. I'm not an appraiser, but I know that they got to go through 2 years of as an apprentice and then become a. So I know usually they're great guys, but you're like, man,
they may not know.
I think that house was worth more, but the CMA doesn't mean the same thing as an appraiser.
Right.
So
right.
Yeah.
If
so
that
what if it
happens,
comes in low?
Good question. If that happens and everybody's willing to accept that appraised value, then that gives you as a buyer the opportunity to go back to the seller and renegotiate the price, number one. Number two, if you like the house at that price and you don't necessarily agree with the appraisal, but you don't want to go through any further hassle, you can still agree to pay that price, but you're going to have to pay the difference.
So you're going to come up with more money down.
You're going to possibly come up with more money.
It's like I want a Porsche and it's $150,000, but I can't get it for $10,000
Right.
unless I come up with a difference. So, yeah.
Right. The other thing that I've done too is that if everybody disagrees with it, you as a realtor in the transaction can help provide some additional comps. Then we can have it reconsidered. So I've done all three.
All right. And then, so if everything goes okay, that was one of the things. Do they have to sign their paperwork in person? Because we've been doing a lot of stuff during COVID and the Instanet. I was telling you about that earlier. The Instanet thing, and I have an 82-year-old lady. The other day, I'll go back to a real situation, and I was on the phone, and I sent it 6 times. I had to delete one, send it again. I go, what's going on? Is it the Instanet? And it wasn't. She was hitting the right-click button versus the left-click button, and being on the phone with her for 30 minutes, I finally realized, what part of the mouse are you clicking? Are you doing the one on the right or the one on the left? Because it's a left click.
Yeah.
And so she goes, I'm trying to do it. And I thought, is she just saying that because she doesn't want to do the deal now? And it wasn't that. It's because she was using the right click button instead of the left click button.
Technical issue.
But then she got it done. So that's what I'm saying. So do they have to be in person to...
That's a good question.
Yeah.
Most of our closings are what they call a hybrid closing. So there are some documents that don't require a notary, and those can be signed electronically. So to answer your question, those don't need to be done in person. So typically before my closings, my closing department will send out those documents to the customer to sign electronically. But then there are certain documents that do require that they be signed in front of a notary. So usually that part's done in person. Now that being said, I do have a real live situation on that one. So that's how most of them happen. But the cool thing is that reduces the amount of time you're actually sitting in person at the title company signing paperwork. I have another customer that's actually going out of town at the time of his closing, and so they can arrange a mobile notary.
Oh, okay.
So, wherever he's going, he can find a notary in that town at his bank or whatever, and then they can do that, but it's still in person. I actually did have it come up once where my customer was in Mexico.
Okay.
And we told her she needed to go to the U.S. Embassy to have her paperwork signed. But she couldn't get to the U.S. Embassy because it was like a 4-hour drive because Mexico's a big place. Through a whole bunch of red tape because the title company had never done it before. I had never done it before. A realtor had never done it before. Yada, yada. We were able to arrange a video notary.
Oh.
So we actually got it approved. It had to go up through the chain of command, up through the powers that be, and she was able to actually sign her documents that needed to be notarized in front of a notary.
Through video.
Through Zoom. Essentially Zoom.
Video.
Just like this.
Yeah. All right. Well,
So,
wow.
Rare circumstance. I think it's going to become more and more common.
Kind of like a doctor's visit through the video.
Yeah, well, we're transitioning right now. We're doing these hybrid closings, so we're getting to that point.
It's going to be like the Jetsons.
Mm-hmm. Yeah, 100%.
Till we get flying cars,
That's
right?
right. Meet George Jetson.
So, okay, one of the questions the guy asked is, he goes, I've never done a loan. I got good credit. I'm going to go in there. what do I bring to my closing? He asked me that the other guy.
What do you bring to your closing?
Yeah, I said, ask your loan officer. I don't know what you got to bring in there other than yourself.
Bring your signing hand and your picture ID.
Do you want your pen or my pen?
That's right. Make sure it's blue. Yep.
Blue. Not black. I always heard it was black, so it's blue.
You know what? Years ago it was black because the copy machines weren't that good and blue didn't copy well. But now the copy machines copy so well that black, they can't tell it from the copy. And so they want you signing in blue. And I was at a closing the other day and they were very adamant about that blue.
Oh.
So that way they can tell the originals.
Mm-hmm. All right.
But you don't have to take your own pen. Usually the title company will provide it.
And the other question they had after that was, will they sell my loan? Once they do it and I'm paid, I paid like 3 or 4 months, do they sell it? And I said, probably.
Depends.
Right.
Yes and no. At Loan Depot, we service some of them, about 30% of the loans that we originate, and then the other 70% do get sold off.
Okay.
If that happens, usually it's done early on in the loan process. If it does happen, you get a goodbye letter from the current lender and a welcome letter from the one that's accepting it. If it does get sold off, the terms of your loan can't change. It means the payment can't change, the interest rate can't change.
They bought the contract.
They bought the contract, yes. The only thing that changes is who you write that check to.
And I guess that's about it. I mean, I don't know how long we've been on, but so one of the questions I want them to know is, how do they find you?
How do they find me?
They're going to find me because I'm on YouTube and I'm going to put everything underneath there. And that's some of the contract information I'll put in there from your card.
Absolutely. Well, this is my card, if you can see it. My name is Cheryl.
I'll zoom it up there.
Feel free to Google me. I got lots of good 5-star reviews on Zillow.
All right.
My name is spelled Sheryl, Arndt, Arndt. You can call me on my cell phone. It's 505-459-1866. You can also go to my website, which is my first initial S, like Cheryl, ARNDT at loandepot.com. Be happy to help you.
And there's a lot of retires here, so the one question I guess I didn't ask that Alicia that was here in the office a little while ago, I asked, she goes, what's the older person's mortgage? The one that Tom Selleck does on TV, reverse mortgage.
Oh, reverse mortgage,
reverse mortgage,
good
but
question.
I go, well, they're buying the house. How are they going to do a reverse mortgage? Don't they got to be in equity? She goes, why have they put half down? And I go, oh.
Reverse mortgage is a topic for another podcast.
All right.
Well,
that's why I get it last. That was the last question I got.
Absolutely. They are good under certain circumstances. If you do decide that you're interested in a reverse mortgage, make sure you research it quite a bit. I do not I know enough about them to be dangerous.
Okay. It's like timeshares. Don't do it.
Yeah, exactly. Loan Depot does them, and we have somebody in my office that is certified to originate them. I would, if you're interested in one, I would get you over to that person to talk to about them. But you can actually purchase a home with a reverse mortgage. I have heard that before.
Okay.
So.
What's your favorite restaurant in New Mexico, and red or green?
I usually like green because I like my vegetables. Yeah. So the red is usually
hotter,
sweeter,
but hotter.
Then my favorite restaurant.
You gotta have one that's I want to go there. I want to go there.
I'm gonna probably pick La Salida in Albuquerque.
All right. Shout out to La Salida.
La Salida in Albuquerque, and the reason is they're very vegan friendly.
Oh, okay.
Yeah.
All right. Or since you like green, what's your favorite green chili cheeseburger?
I happen to be a mostly vegan, so I would.
Is there a vegan green chili somewhere that somebody needs to know about?
Not sure on the cheeseburger part, but the green chili, yes.
Okay.
I will say, good. Thank you very much. My non-vegan husband actually prefers the Beyond Burger at Trail Rider Pizza in Cedar Crest, New Mexico.
All right.
We went there before he had even ever tried one. Big meat eater, loves mushroom burgers. And I convinced him to give it a try, and he did. And he said, I actually like the Beyond Burger better.
I tried one when they came out, and I was like,
I won't eat them. That's the funny part is I won't eat them.
Because they taste just like meat.
They're way too
taste like meat. Like, so
I can't do it. Yeah.
Even though you know they're not.
Yeah.
Okay.
I can't do it. Yeah. But for somebody like my husband who likes both, and
that's
he actually likes it better.
If they're done right, the Beyond Burger tastes better.
All right. That's it. See how easy that was? I'm glad you came in.
I'm glad you had me.
Finished.
CEO, entrepreneur, businessman, auctioneer, creator of 24/7 Open Homes, and host of New Mexico Red or Green Podcast, Jaime Ramirez. People call Jaime the New Mexico Traveler because he keeps it all about New Mexico, the state he loves.